Over the past 24 hours, the crypto world has shifted. Not dramatically, not explosively, but in a way that feels unnervingly familiar. A sudden 0.82% market drop, a quiet continuation of a painful 10% slide this week. And beneath those numbers lies something far more unsettling: panic, pressure, and a market testing the edge of fear. Today, we're looking at why this is happening and what it means for the days ahead. Because this isn't just another dip. This is a stress test of Bitcoin's confidence. 1. The panic nobody wanted to see. It started with a wave of selling, not from institutions, not from long-term believers, but from the newest players in the market. According to on-chain data, over 148,000 Bitcoin were dumped at a loss. On average, about $10,000 lost per coin. These are the short-term holders, the traders who have held Bitcoin for less than 155 days, and they're capitulating. Visual cuts, candles crashing, red volume bars, RSI chart dipping. Bitcoin fell from its October peak of 126K all the way to 94K, slicing through the psychological fortress of 100K. A level untouched for half a year. The RSI? A shockingly low 8.26, smashing extreme oversold conditions. But here's the twist. Oversold doesn't always mean bounce incoming, not when fear takes over. The line to watch now is $92,000. If that breaks, we may be revisiting the April lows around 74K. 2. The giants are moving, and everyone is watching. When retail panic sells, the market shakes. But when institutions move, the entire landscape changes. On November 16th, BlackRock shifted 4,880 BTC, worth $643 million, onto Coinbase Prime. Historically, this kind of move has often preceded institutional selling, and the numbers support that fear. U.S. Bitcoin ETFs saw $870 million in net outflows this week. Just a month ago, we were celebrating $3.4 billion in inflows. Now, the tide is reversing. ETF flows have become crypto's lifeline, and right now, that lifeline is thinning. Open interest in Bitcoin futures fell another 4% as traders quietly reduced risk. And hanging over all of this? A macro wildcard, U.S. PCE inflation data dropping this Friday. A hotter-than-expected print could delay Federal Reserve rate cuts. If that happens, risk assets, including crypto, could see even more pressure. 3. The leverage time bomb. While retail panic and institutional moves dominated the headlines, a third force amplified everything: leverage. In just 24 hours, over $1.3 billion in long positions were liquidated. Traders who bet big were wiped out big. The Fear and Greed Index plummeted to 17 out of 100, deep in extreme fear. But here's the strange part. Perpetual funding rates turned slightly positive at plus 0.0069%. That means some traders are already betting on a rebound. Is it bravery? Is it recklessness? Or is it the early signal of a reversal? Adding more complexity, crypto remains tightly linked to tech stocks, with a NASDAQ correlation of 0.78. So if macro volatility spikes, crypto feels it instantly. 4. The moment of truth. Right now, the crypto market stands at a crossroads. Retail investors are panic selling. Institutions are repositioning. Leverage is unwinding, and macro uncertainty is tightening around the market. Technicals say Bitcoin is oversold, but oversold alone doesn't save a market. For a true recovery, two things must happen. 1. Bitcoin must hold above $92,000. A clean break below that zone opens the door to much deeper losses. 2. ETF flows must reverse. Because in this cycle, institutional liquidity is the heart of the ecosystem, and the next 48 hours may tell us exactly where Bitcoin is headed. A massive $1.3 billion options expiry lands today, a moment that could inject either volatility or relief. And on the horizon, a bigger question looms. Will the SEC accelerate new ETF approvals, or will institutions continue to pull liquidity out of the market? For now, all eyes are on support, on sentiment, and on whether the market can find its footing before fear turns into something deeper. Because sometimes, it's not the crash that defines the market. It's how quickly it finds the strength to stand back up. Stay in the loop. Don't forget to subscribe. The Crypto Loop.